Welcome to our YouTube channel, Opinion for Forex. Welcome back to our channel. Today, we dive into the aftermath of this month's Federal Reserve interest rate hike and its impact on equities. The markets have shown resilience, but there's a growing concern among retail traders. Let's take a closer look at the sentiment and technical analysis for the Dow Jones and S&P 500. Could we see equities continue to rise from here? Let's find out. The Federal Reserve's recent interest rate hike didn't seem to rattle the equities market too much. However, retail traders are expressing a more cautious approach. According to IG Client Sentiment Outlook, the majority of retail traders, about 81%, have positioned themselves bearishly on the Dow Jones. Interestingly, this could be a bullish signal. That's right. Outlook often behaves as a Contrarian indicator. The fact that a significant number of traders are biased lower suggests that prices might actually continue to rise. Recent data shows downside exposure in the Dow Jones has increased by 4.02% compared to yesterday and a substantial 22.81% compared to last week. This combination of overall exposure and recent changes points to a stronger bullish Contrarian trading bias. The Dow Jones is currently hovering just below the February 2022 high at 35,752. This level represents immediate resistance. If the index manages to clear this point, it could pave the way for reaching all-time highs, creating a zone of resistance between 36,446 and 36,832. Let's shift our focus to the S&P 500. Outlook indicates that approximately 71% of retail traders are currently bearish on this index. This might suggest a bullish signal, similar to what we saw with the Dow Jones. The Contrarian nature of Outlook shows that even though most traders are biased lower, there's a possibility of prices continuing to rise. Recent data indicates a slight increase in downside exposure for the S&P 500, up by 0.55% compared to yesterday and 2.55% compared to last week, further supporting the bullish Contrarian trading bias. The S&P 500 has reached a critical resistance zone between 4,586 and 4,631, which consists of peaks seen in March 2022. However, there seems to be a note of caution in the technicals. The negative RSI divergence suggests that the upside momentum might be weakening, which could potentially lead to a turn lower. In such a scenario, traders should keep a close eye on the 20-day MA, which could provide support. So, there you have it. Despite the Federal Reserve's interest rate hike, equities have shown resilience, with retail traders expressing cautiousness. IG Client Sentiment indicates a bullish Contrarian trading bias for both the Dow Jones and the S&P 500. However, traders should keep a watchful eye on key resistance levels and potential technical indicators that may signal a trend reversal. Remember, the markets are always subject to change based on new data and events. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to our channel for more updates. Thank you for watching, and we'll see you in the next video.